Hey folks, ET here, and today I'm going to walk you through how I've been using the different GEX exposures on our expiry filters here to plan out some swing trades. Now, a couple of things to point out here. This is somewhat subjective. I have been using it to some success over the past few months, but and data can change throughout the week, so it's always a good idea to make sure you check and see if any of the gamma exposure here, if this GEX has changed throughout the week to change your thesis. So right now what we're looking at is we are looking at Uber. Now this is next week's. This is the 7/21 expiry filter. Now what I'm looking at here is pretty simple. I'm looking for our biggest positive and our biggest negative level, and I'm planning out my trade beforehand as we go along. So when we were looking at last week's on our 7/14, we had some 45.5 and a big pull to 46. Okay, so when I was looking at my Uber trade, I was looking to go short as I was planning it out, and we can take a look at its day. If we go right here, it did get over 46, right? Whipped over a little bit, obviously, if we just want to go flat there, 46.32. As we got up to 46, I decided to go ahead and enter my short. Now let me explain to you how I planned that short out a little bit. So this is last week's. This is the end, the 7/14, going into 7/21. Now this is a pretty sizable drop that it's showing here. I did not go 37.5s on my swing. I actually went 44.5s on my swing, and I gave myself 2 weeks to go out. Now I'm obviously way in the green, and I have already trimmed some a little bit as I've gone along. But when I was looking at these two levels here going into next week, right, I saw, just want to show you again, I saw where our biggest pull was going to be on Friday. We hit that 46, okay, and we still haven't dropped, and we dropped below this 45.5. Our next biggest pull was 45, so we actually dropped below that a little bit as well. But getting up to this pull is where I was wanting to enter my short, because we have a big pull next week. That's like a 20% drop or so, or 15% drop from where it was at, maybe more. So I did not go there. I went 45.5s, which is still beneath this big positive level that should repel if price can't get above. I also checked certain things like where our GEX and VEX profile are for these tickers. Okay, so this one really isn't supported anywhere up here, but it's supported more down here towards, weirdly, a little bit below this exposure here. So what I'm looking at, and we'll take a look at another one real quick. What I'm looking at, another one is ARC. Okay, so my plan, if we take a look at 7/14, ARC's biggest pull was 50. Let's just pull up its chart real quick. ARC's biggest pull was 50, and look where price went on Friday. Okay, we got 50.33, almost the exact same chart on a lot of these things. We had these big run-ups and then a little bit of a drawdown. So when I was looking for ARC, right, I looked at a couple weeks out. First I checked where is it possible for us to go on the expiry for 7/14. 50 would look to be our top. There wasn't anything after it. So then I took a look at 7/21, and I looked, okay, our biggest pulls after that are 45.5 and 48. So I chose an in between. I chose 2 weeks out at 47, right around 50. Obviously, I did not have my entry perfect because I got in at about 50 and we still went up another 46 cents. But since I was buying 2 weeks out and it's a swing, doesn't hurt too much when you're not buying ODTEs, right? So those 0 DTEs will get you if you're trying to scalp and be a degen. I am primarily a swing trader, and I go 2 weeks to a couple months out depending on what I'm eyeing and what I'm seeing. So for ARC, I went ahead and grabbed in between here at this 47, because these pulls are fairly even right here, and 50.5 is as well, but it's got a decent rejection at 50. So if we have a big run up Monday morning, this could repel, right? Price over will push, but price under could repel backwards, keeping me in. Another thing that I like to do when I'm doing these is I don't buy all at once. Sometimes that hurts me because the trade goes my way instantly and I would have made more money, which for my ARC position, I went 1/4 in and it went ahead and started dropping, and I'm well up, and I wish I would have gone half or maybe 3/4 into my position. If you just want to do simple math, that's if you're dedicating $1,000 to a trade, I would buy in 250s. That is kind of how I plan that out until I'm there. That gives me time to be right when following all of these Greeks. If we go ahead and push a little further out, ARC still looking at 47 as the biggest pull 2 weeks out, which is where I bought. So my goal is for it to tap that 47 and exit my trades. Gets a little lower as we go a little even further out, but I only went 2 weeks, so I'm not too worried there. We'll take a look at another one real quick, just to give another example. BA. So BA's 14 pull, its biggest pull was 215. We actually dipped below that, okay? So we definitely dipped below that, and 210 was really where I was looking to enter my longs, but I decided to go ahead and go in at 213, and I went 220s, and here is why. It looks like 210 should be our bottom for the week on for the 721 expiry, and 220 is our biggest negative pull. So I went 220 a couple weeks out. I only bought in 1/4 of my position, so right now I'm about break even because 213 was my spot. I'm not down much, and theta, the Greeks aren't killing me that much because I did go a few weeks out. So I still have some money reserved for my swing right here at this 210 in hopes of a repel back upwards towards this 220. Now amazingly, after I discussed this position, a trading flow came through for 721 220. So someone might know something. It was an order over 10 plus, which have more consistency there. And that's what I'm eyeing here, and this is how I plan this out. Let's just grab a random ticker. We'll just pull something up. Let's see, Airbnb. I played this last week to the short side, and I decided to go long instead because some data had changed. I'd like to point out, let's see here. Airbnb going into next week, 721, has a pretty big pull towards 140. Okay, now price is above there, it's 144. If you look at this, 145 for me is a decent spot to short Airbnb. Okay, short air because it's got a little bit of a repel, and 140 is its biggest pull. So when I'm looking to swing this, I'm waiting for 145, and I'm looking to short a few weeks out to 140. If we go a little bit further out, we can see if there's any data change. 135 is even further out. So if I'm buying 2 to 3 weeks out and I'm buying 140 puts, I have a potential for a few weeks for it to tap 135, so I could hold some runners to here if I'm planning along. I hope, wrong one, there we go. Still 135 as we get a little further out into it. And then obviously 135 is a decent repel if we're looking further out all the way into 8.4, with 130 being its biggest negative pull. So this is really, I hope this isn't too confusing to you. This is really how I've been planning out my swings lately, is I've been checking the exposure to see where its biggest pulls might be, and I will go through and I'll look at OI real quick, just briefly give it a glance. I'll check its 5-day net flow to see if there's any difference in it. I'll look at where puts are bought and calls are sold, things like that. And also I will check its dealer Greeks build up to see if there's any. This one's an inverse, so it's actually a short. I will check its dealer Greeks to see if there's anything that's different that also coincides with it. I will check its price distributions and things like that to see if there's any change there that I might like. And it's a good idea to check your dealer OI and your customer OI. So Zom here is actually looking pretty bullish on a lot of things. And so let's just go ahead and take a look at its 721 pull. It is currently 107, which means we were bottoming out around 100. If you look at this, it could be just a beautiful play, and I'm kind of sad that I didn't check and miss it since we did tap that 100. Some 107 calls going out a few weeks might have been pretty good. Let's see if it changes up when we get into 728, 106, so maybe even some 105 calls a few weeks out, because that's another big pull. That's still a $5 move and a decent swing trade as it goes along. And also, if we take a look at that, it's also supported around those prices, so that makes a little bit of sense. So that is how I kind of plan out these trades for my swings. Remember, I am primarily a swing trader. I do scalp SPY daily just to keep that skill sharpened. I don't want to lose the skill as I go along. I want to be able to check my levels on SPY and go short and go long on different things. But that is how I've been planning all of these trades out. We'll pull up one more for you, just so you have another example to go by. AMD, if you're in the trading server, you know I've been hammering this long and short for 3 consecutive weeks because its gamma levels play out so well. Now, it just slightly went bearish here, just ever so slightly, and it has a pretty decent win percentage, so it's not too bad. But this is one of the ones that I love going long and short. Wow, look at this. Dealers are looking a little short on it going into 721, and customers are as well. So let's take a look at its gamma. Let's take a look at its 721 really quick. 110 is still its largest pull, and its biggest push away is 112. It's got some other ones up here at 120, 125. So shorts to 110 on run-ups is what I'll be looking for on Airbnb. Let's see how far out we can go with those. Not too far, actually, because our biggest pull going into the week after that is 114. So that's really just a weekly scalp, big run-ups, shorts to 110 a few weeks out, take profits along the way. And as we get a little further along, we know maybe it could flip a little bit. Over 115, 125 looks pretty good going into August, early August. Its gamma profile is about the same. 110 is where it's most supported. So this helps support our short AMD run-ups as it gets above. This is how I plan my swings. Some people just day trade it. I will hold it for a little bit and I'll let it go and just kind of let my runners do their thing. That's where the money is made, is scaling, for me, is scaling out of a good portion of my swing and letting my runners go multi-bag. Something that only cost you $100 can end up earning you $500 after you've even scaled out of a large position at 20 to 50% already, and so it really just starts to add up and compound. That is how I have been using this GEX exposure here to plan out my swing trades. If you have any questions, just comment on the video or comment on the Twitter post that has the video, and I'll get back to you and answer them the best I can. Everybody have a good day, and go get that Oprah money.